Welcome Anshul Saigal on the show as well. Anshul, hi, what have you been doing off late? Because markets have been fairly volatile. Have you been churning your portfolio quite a bit or just staying put?
Hi, Anisha. Morning. Thanks for having me. Um, Not really churning too much, but this is a time in our judgment where quality stocks have corrected because of general volatility in the markets. And if earnings remain stable and earnings growth remains as expected, then these are stocks which will rebound. Some names which one hoped would correct and one would buy at reasonable valuations have come to those kind of levels today. There has been an across the board 30 to 50% kind of correction over the last, say, 2 to 3 months, particularly in the last 15 days. And given this valuation reset, we find opportunities which one can invest in for the long term. Of course, in the short term, one doesn't know if volatility continues, then these names may correct even more. But that's all right. If one has a sight of, say, 2x to 3x the value as it exists today, then this is a good time to be looking at some of these names. We are looking at names where there is earnings growth visibility. And I think that your viewers also should look at such names where earnings growth is not in question.
And what would that be then, Anshul, where you do have earnings visibility and the valuations have also come to a comfortable mark?
Morning, Aisha. So what has happened over the last, say, 3 to 4 years is that the in the tier 2, tier 3 towns, also in the middle classes and lower middle classes, um, individuals and households have gone on to conserve their capital, largely because they needed to shell out a lot of their capital at the time of COVID, because that was the only resource that they had. Now, as a result, we have seen a slowdown in consumption across the board, whether it is staples, it is consumer discretionary. We've seen a significant correction in that segment of the market over the last 2 to 3 years. Our belief is that we are really at the end of this downward cycle. Valuations have become quite reasonable in this space, more so after the recent correction. And many of the companies, if you listen to their calls, they're giving commentary that they're seeing a bottoming of the growth cycle. I mean, look at how the jewelry companies have released their SSG numbers. Look at how value retail companies have released SSG numbers. It's clearly a sign that there is a turn on the horizon. And if that plays out, these companies where valuations are really very reasonable, actually multi-year lows, you could see a significant risk-adjusted return in these names over the next 2 to 3 years. Besides this, one for various reasons, in the entire textiles value chain, we see that there is tremendous opportunity, whether it is spinning, whether it is bed and bath linen, or it is garmenting. There is significant opportunity in that space for disparate reasons. Spinning, because Indian cotton and global cotton prices have converged. Garmenting, because of the issues that are happening in Bangladesh. And bed and bath linen, because there is general tailwinds in demand in that space. Also, China, by and large, is getting out of this space with tariffs coming in as Trump comes into office. That will be a further tailwind to this sector in our judgment. So textiles again looks quite interesting.
Macquarie has come out with a report on QSR. Anshul bhai, so nice to have you back. Mumbai or Dubai?
It's a pleasure. Sorry.
मुंबई से ज्वाइन कर रहे हो, दुबई से ज्वाइन कर रहे हो?
नहीं मुंबई से. आपका बस चले तो आप दुबई में बिठा दो अब.
You know, it's just that whole debate about golden visa and how migration is happening there. I mean, we'll do it offline, but I think that's a trend which I can only see more and more getting pronounced in terms of where, you know, a lot of ultra HNI investors and some of the smart money managers are moving. But I'll pause it there. We'll take this debate on some other forum. You mentioned textiles. Now in India, textiles A, they're cyclicals, B, they're not globally competitive. And C, despite this rich history in textiles, maybe a Gokuldas, maybe a Raymond's, no other company has really managed to hit out of the park. What makes you bullish on it then?
You're right, Nikun bhai, but there is, times change, situations change, and you have to react to the situation as it exists then. The headwinds for textiles, many of the textiles companies over the last many years have been quite substantial, and as a result, only a few have broken out. But when the tide is rising for the sector as a whole, of course, in such an environment, it is better to look for the leaders because those will disproportionately benefit from the rising tide. But that rising tide picks up all boats. And so you will see all of these companies do well. However, I must mention that the trends in place are not so much for domestic textiles. Of course, there again we are seeing a reversal in demand, but the trends are quite pronounced as regards the exporters of textiles. As I mentioned, both in spinning as well as in garmenting, we are seeing trends being positive for that segment of the market. Bangladesh is having its own domestic problems, and Bangladesh is a very large player in the global garmenting capacity. That is going out of the system, and India is benefiting. We are seeing that in month-on-month numbers. One company, one garmenting company based out of Tirupur, has seen as much as 27% growth in revenues on a month-on-month basis. You can well imagine, and this is a large company, one of the largest garmenting companies in the country. You can well imagine how this would be playing in down the line in the supply chain. Also, spinning, home textiles, we think that again here there is tremendous tailwind. Most of this is for the exports, less so for the domestic, but overall there is tailwinds in demand, and that should reflect in valuations over a period of time.
Also been a big fan of textiles, and textiles and media are two sectors which have not participated in this bull market at all. Which is your favorite textile stock, Munaresh?
So in terms of textiles, like the whole garmenting pack, which is where a basket of Gokuldas exports, SP apparels look interesting, and say a PDS. So that's the basket one on the garmenting side, and on the spinning side, it would be Nitin Spinners, which looks interesting.
In the meantime, today, of course, Shoppers Stop as well as Sula Vineyards will be reacting to the Q3 update coming in. It's a very, very good set coming in from Shoppers Stop. In fact, after a long time, we are seeing a bit of a revival when it comes to the retail segment, especially in the mass category. And of course, Sula, the numbers continue to be muted, but the street is betting that perhaps worst is over. Anshul, have you looked at either of the two stocks, Shoppers as well as Sula?
I have looked at Shoppers for sure, not in terms of not as a purchase, but just to analyze how this company has done, because I have interest in this space, particularly in value retail. If you look at the numbers that Shoppers came out with, SSG numbers were very robust. But what was more exciting about the name is the margin expansion, both on gross margins as also on EBITDAs. Gross margin expansion went up largely because of private label sales going up as a proportion of sales, and that meant that higher margin products were being sold more, and as a result margins went up. Also, the commentary is something that one will wait for, but it looks like this is a space which is going to see tailwinds in the coming few say quarters or years. I'm positive on the value retail space, although this company doesn't strictly fall in that category. But value retail is a space which looks quite interesting in our judgment over the next few quarters and years.
Okay, 17 points higher for SGX. Okay, I'll go back to Adani Group of stocks again. And Anshul bhai, what happened yesterday? There's nothing new, there is nothing old, but the stocks went up as if there's a fresh buyer who's come back.
That's right, Nikun bhai. Adani Group has a few things going for them, which one has to keep in mind. aside from the regular issues that are ascribed to them, if you look at the way that this group executes, their execution is clinical. And this market will actually reward players and groups and companies where execution is not in question, because this is a nervous market and they will not want to be in those names where execution can falter. In this particular group's case, at least on that count, the market is quite confident that execution will not falter. And as a result, they will reward this group in comparison to many other stocks on the exchanges. Also, if you look at what is embedded in many of these companies, from green hydrogen to data centers, to metals and minerals, to airports, to, of course, power, ports. I mean, these are really things where we are only just beginning, and the runway for growth is just so tremendous over the next few years that this is a group which will be liked in the long term. Third, if you look at just the presentations that the group is making and the runway that the group is showing for both investments as also for growth, it's really tremendous that you find very few institutional investors in these names. I think that will change. There will be institutional interest, domestic institutional interest, which will build up over a period of time, and that could really fuel the next leg of upside in this group. So this is a very interesting group with quite interesting futuristic sort of businesses embedded into the group, and for their execution, this group will be liked, which is what we saw yesterday in generally a nervous market. I mean, good but nervous market. This group was really taken up.
Meantime, Anshul, I wanted your take regarding the MFI space because the street is a bit divided there. This morning, Goldman Sachs has written a note saying that the pain is not over. Perhaps there could be further downside for some of these MFI names, while others believe that perhaps Q3 is going to be the worst of it, and from there we'll see a recovery. And we have seen a bit of a recovery initially in the stock price as well. Would you start buying MFIs yet?
Anisha, I mean, just as an aside, if you're in a ring where you're doing bullfighting, you're bound to at some point get hurt. And this sector is akin to a ring of bullfighting, really, because there will be occasionally instances where, because of what is happening in the environment overall, the sector as a whole will get impacted adversely. The risk of lending in this space is so high, which is why the yields that companies make in this business are also commensurate with that high risk. Quite high is the yield that companies make in this space. This is a phase where companies are getting hurt because the system has been strained and their credit quality of their clients has gone down. They're hurting at this time, but this too shall pass. And this is a sector where one has to really look at the sector only when there is blood on the streets, because it is then when valuations are in favor. When things are going good, because growth is so high, valuations really touch the skies, and that's really not the time to look at this space. It is when there is blood on the streets that one should look at this space. And whether the sector has bottomed out, I don't know, but clearly the valuation froth in this space has come off, and it looks like at some point between now and the next 2 to 3 quarters, the sector will bottom out. It will then look very interesting in terms of valuations. I think that this is a space which will have interest for us even today and maybe in the next 1 or 2 quarters.
Okay, still looking at the entire MFI space quite positively, just the timing has to be appropriate.
Anshul, is there merit in looking at cement? I mean, this is one of those sectors which has just not participated.
Yes, that's a very valid point, Nikudbhai. I think that cement is quite interesting again in the context of how it has played out in recent times. You had cost increases, and on the other hand, you had 2 large players trying to consolidate the sector as a whole. So pricing stability, which used to be the nature of this business, has really gone for a toss, particularly in the south of India. And as a result, you're seeing margins compress for the sector as a whole. Having seen this play out over the last 2 years, we have also seen weaker players go out of the system and getting consolidated into these largely two large players in the market. We anticipate that with this trend having played out over the last 2 years, pricing has bottomed, and from here, pricing should start looking up. As a result, you will see margins, EBITDA margins for the sector, EBITDA per bag, EBITDA per ton, those numbers actually looking up from here. And with the stocks having done nothing over the last, say, 3 to 4 years, this space has valuation comfort in our judgment. If growth comes in, if margins expand, which is what we anticipate, and with valuations being where they are, the risk reward in this sector looks quite interesting. And again, with a 3 to 5 year perspective, very little to lose here and lots to make.
Okay. So which is the best one to buy? Regional players, all India players?
So here, what is interesting is that being a commodity sector, you have to be very focused on efficiency. Where is it that the stock has the lowest cost per ton for the entire space? And if you look at some of the leading players countrywide, you see that some of them are really head and shoulders ahead of the others. Take Shree Cement, for instance, sort of a cost leader in the sector for the longest time. And that is unlikely to change going forward as well. Some of the other players, say an Ambuja or an Ultratech, will have scale benefits, which will be greater than, say, a Shree Cement. But again, those are benefits which should play out in margins for those companies. I would stick myself to the national players and the occasional regional player, but the national players will benefit disproportionately if the sector is to turn.
If you like this video, then like, share and subscribe to ET Now.